So sorry for the delay, everyone, but welcome to JDC West 2022 Accounting Case Presentation sponsored by CPA. Thank you to our judges, Alex Mariano, Gidi Tucker, Nikki Bello, Gary Sorba, and Sana Anwar. Competitors will have a maximum of 20 minutes to present. Immediately following the presentation, judges will have a total of 5 minutes to ask the presenter questions. Competitors, you'll see Zoom chat notifications at various intervals to indicate the remaining time. Any speaker who continues to speak after the maximum time limit will be stopped. No questions or comments will be permitted from the audience. All judges are asked to have their microphones muted during the presentation. The audience is banned from any material or naming convention that bears the name or symbol of the competing university, and we ask that the audience leave the Zoom call immediately following the presentation. Judges, please stay on this call until I advise you to move to the next call. And with that being said, competitors, you may now begin your presentation.
Can everyone see my screen all right? Ms. DuPont, you took a bold risk to leave your job in order to raise your children, and now you're raising this brand from the ground up. We believe that your reputation as an advertising professional has never left you. Your human advantage of having strong charisma is what differentiates you. All you need to do is to take a step forward. Hi, I'm Kelly, and I'm joined by Kaden and Cheryl, and today we're so excited to embark on this business journey with you. Now, let me briefly cover what the next 20 minutes of your time will look like today. The question we'll be answering is, what are Three Kings Media's next steps to expand their growth? And we'll be analyzing your company breakdown, your competitive landscape, as well as your capacity constraints. And we will propose a 3-step recommendation to grow, establish, and delegate, which will lead to an overall impact of being able to leverage your advantage and achieve a 4.5 times growth in earnings.
So today we'll be really focusing on 3 key components: company, competition, and capacity. In terms of company, we'll be looking at your company and its current situation. In competition, we'll be looking at key industry trends that we can capitalize on. And in terms of capacity, we'll be looking at both management and financial capacity. So first, let's take a deeper dive into company and what our current situation looks like today. Based on our analysis, you have achieved a reasonable amount of success in your current situation, despite being only having a single employee owner and having to contract out a lot of your jobs due to having excess capacity and being unable to service them. This being said, you are looking to grow and expand outwards. However, before we do this, we have to first look inwards and assess what our key core strengths are. And what our basic analysis of our balance sheet reveals is that Three Kings' biggest asset is its owner, Ms. DuPont. She brings exhaustive industry knowledge, years of pitching experiences and success, as well as a strong network and reputation, which really leads to the key point that client acquisition is Three Kings' biggest advantage today. However, our current strategy doesn't really play to our strengths, and as a result, we really believe that Three Kings needs to delegate and capitalize on its advantage, which is business development and client acquisition. So what does this really imply for our 2 different opportunities that we've been presented with? Well, in terms of SIR Corp and that opportunity with them, we see that we're dealing with a single business that we are already familiar with an extremely volatile CEO who is prone to jeopardizing the longevity of the contract. And as a result, we don't believe that this opportunity plays to Three Kings' core business strengths, which is establishing new long-term relationships. The UCA opportunity, on the other hand, has a strong focus on pitching and securing new clients and gives us the opportunity to really dive back into the industry and establish those new relationships. And as a result, this really does play to our key core strengths. Next, we'll be looking at a quick alternatives matrix where we assess 4 different alternatives: the SIR Corp opportunity, the Union Creative advertising opportunity, pursuing both opportunities at the same time, or just remaining at status quo. Now, as I mentioned earlier, UCA was clearly the better option in terms of strategic alignment. Next, we'll be looking at the competition and some key industry trends. And what we see here is that we have steady growth expectations and extremely low barriers to enter the current industry. And what this has led to is a lot of competition among reputation, as a lot of these new firms have little to no track record whatsoever. In terms of low switching costs and extremely high client bargaining power, what this has really led to in the industry is extremely high price competition among firms. So how can Three Kings really compete in both the types of competition? Well, in terms of reputational competition, what we're really looking at is establishing long-term relationships and building up that credible track record. In terms of price competition, what we really want to do is aim to unlock economies of scale, which will give us a much higher bargaining power with our suppliers. Now, what do both of these have in common? Well, more clients establishes more credibility and unlocks more economies of scale, which helps us create a long-term sustainable competitive advantage. So once again, tying this into our two opportunities, we see that SIR Corp does present us with a very large single client. However, the duration of this contract is uncertain. And as a result, while this opportunity could help us establish a long-term competitive advantage, the UC opportunity, we believe, is a much more sustainable and diversified approach, which will have a much higher chance of succeeding. As a result, we're going to fill in the alternatives matrix and move on to our third consideration, which is capacity. Now, Three Kings really has to take into account two types of capacity: management capacity and financial capacity. In terms of management capacity, we are seeing that you currently have a single employee, which is lead to a lot of outsourcing work to third-party contractors, which is a lot more expensive than it should be. In addition to this, we are lacking business development opportunities and turning potential clients away just due to the fact that we can't service them. And you also lack a lot of credibility being an employee with being an organization with only a single employee. And what we see here is Three Kings is already exceeding its current management capacity. In terms of financial capacity, we estimate that you have around $20,000 in cash to work with, which means that you have enough cash to fund the UCA opportunity. However, the SIR Corp opportunity is not going to be financially feasible without an external financing injection. So filling these two considerations into our alternatives matrix, the last consideration we really want to look at is financial impact. And what we did here was do a quick pro forma financial analysis. And in the optimistic case and pessimistic case, we see that UCA is clearly the much more lucrative option financially. And as a result, we are going to be recommending to go with this alternative. Now, finally, completing the alternatives matrix, what we can see here clearly is that based on our evaluation criteria, union creative advertising is clearly the better alternative to go with. One key consideration we want to keep in mind, however, is that this will put an additional burden on the already strained management capacity. Next, we'll be moving on to our recommendations, and our recommendations today really focus on one key point, and that point is that you need to delegate what you do. You need to delegate your tasks in order to focus on what you do best, which is client acquisition and business development.
Now with our analysis, what we did here is to help you to build a 3-step plan, with the first being to grow your revenue by partnering up with UCA. And to supplement your growth, we really want you to establish yourself by leasing the office space, as well as to dedicate work by hiring additional employees. And taking a closer look at our first recommendation, which is to grow and partner with UCA. What this means is that the marketing industry is currently very evolving and changing rapidly. And for you, Ms. Dupont, to be in a small business in the marketing industry, you need to act fast and be good at what you're doing. This meaning that partnering up with UCA will really help you to specialize in your niche area that will help you to achieve the competitive advantage and increase profitabilities in the long run. Looking at our partnership framework, what we can see is that the first step you should go ahead is to follow up and express your interest in your partnership with UCA. However, one of the key considerations that we want you to be worried about is the potential issue regarding the disclosure of your employment status. Currently, the UCA has approached you to become their pseudo director on the team when presenting business pitches to the team. However, we believe that this is unethical and might be detrimental to your business brand and presence in the long run. Therefore, what we are recommending here for you is to go ahead and renegotiate the disclosure terms and secure proper partnership agreement. With your partnership agreement, you will then go ahead to fulfill your obligation, meaning that you will pitch together with UCA to provide a full range of business services. And once you secure that deal, you will be only in charge of the marketing portion of the business, and UCA will take into consideration of the client engagement and production. What this means for your business is that it really helps your business to be in the game, to gain deeper industry knowledge and build those business relationships, which will in turn help you to gain better bargaining power. And this also comes from your higher processing volume, and you're able to take economies of scale now. And looking into our second recommendation, which is to have a physical space in the office. Ms. Juban, we know that you're currently very concerned about the ongoing pandemic and uncertainty about returning to in-person work. However, what we want to point out here is that with the ongoing pandemic, you're presented with the opportunity to take advantage of the favorable leasing term with the high vacancy rates. Moreover, having a physical office here will really help you to establish that credibility and increase your industry exposure. Therefore, we really want you to take the right timing here to go ahead and have a physical office in Toronto. And when looking at having a physical office, we're presented with two different options here, which is to either buy an office or rent an office. Looking at the two different options, what we're seeing that is leasing the office will give us a better location located at downtown Toronto, whereas the buying location is located 15 minutes away. What this means for us is that by having the renting location, it will really help to foster that business relationship and capture those walk-in clients. Other than that, the renting option will propose better for companies who are growing dramatically, and the buying option is more favorable to business who are stable. Looking at the financials, we're seeing a very similar out-of-pocket cost for both options. However, the rent option do propose a significant way less total monthly payments, meaning that this will give us less cash flow and really help the business to stay liquid in the industry where cash is the primary concern. Therefore, we recommend you to go ahead with the renting option. And what this means for the business is that it really helps the business to capture those hidden business opportunities, as well as helping you to facilitate better collaboration and company culture once you return to in-person working. And that leads us to our last recommendation for today, which is to hire additional personnel and employees. Ms. Dupont, we know that Three Kings Media currently has very limited management capacity, and with our partnership with UCA, it proposed greater challenge for us. Therefore, we believe that it is a perfect opportunity for you to go ahead and hire those additional media marketing specialists to release the burden from you and for you to be better at what you're doing. Looking at the hiring strategies, we see that by partnering up with UCA, your company is required to hire 3 additional employees, with 2 working in the media planning and buying sector and 1 working in the client service. And looking at when hiring them, we really want you to focus on a couple of the strategies here, which is first to prioritize attracting local talents. This is because that our office is located in Toronto downtown, and hiring local talents will really help us to go through an easy transition when we go into in-person working. Other than that, we also want you to consider hiring full-time employees rather than contractors. This is because that it will help with your employee morale and really help you to lower that upfront training cost. Another key thing that you should keep in mind is to pay attention to the ongoing pandemic. We know that, Mr. Pong, as a person working in the marketing industry, your human resource is your biggest strength and asset. Therefore, we really want you to prioritize their health by adopting a hybrid work model. This means that you should pay close attention to the COVID situation and make adjustments accordingly. And with the 3 persons hired, we really hope that this will help your business to deliver better quality and outstanding work to your clients and to really foster that long-term client relationship, which will in turn also leave you vacant management capacity to service future business opportunities. Now we have summarized all of our recommendations. We want to be looking into the financial impact and what this actually means for your business. What we did here is to build a 3-year pro forma income statement, taking into a lot of different considerations. A couple of highlights here is that you will be seeing a 1.8 million incremental revenue from your partnership with UCA, as well as you will see a majority of your increase in expense coming from the in-person working, totally at around $900,000. We only started including this starting in 2023 due to the uncertainty of COVID situation. And in total, this will help you to achieve a net impact of about 4.5 times growth in revenue in your earnings. I also want to point out some financial highlights here. As you can see on the slides, you will be experiencing stable annual revenue growth at about 3.5% starting in 2022. Adding on to that, you will also be seeing a 10% annual EBITDA growth.
And now that we've covered our 3-step plan, it's time to put the plan in action. First off, starting with our planning stage, the key milestone here is that by the middle of Q1, we do aim to finalize the partnership terms with UCA. In our execution phase, we hope that by the end of Q1, we will have signed the lease agreement, and by the end of Q2, have hired our 3 full-time employees. And with our recommendations, we need to monitor to ensure that what we put in place is successful. Therefore, we will be looking at our company growth, our client retention, and our industry bargaining power. And we'll be measuring this with key performance indicators. So looking at our company growth, we'll be measuring that with new client contracts with a goal of 6 successful pitches. We'll be looking at our relationship success by measuring our retention rate with a goal of 84%. And we will be looking at our bargaining power by measuring our supplier margins with a goal of 20%. Now moving on to employee management, we understand, Ms. DuPont, that you've been working by yourself for a very long time. So it can be a difficult transition by hiring an entire new workforce. So in order to help you with that transition, we're going to suggest that you optimize your virtual workspace, have weekly check-ins with your employees, and celebrate those small wins to increase company morale. And this will ensure a smooth transition for your new employees. And you've also asked us how you will be able to measure your productivity in a virtual space. And we will suggest that you track task completion, have client feedback on your employees, as well as do performance evaluations to ensure and evaluate an efficient workforce. Now onto our accounting considerations. So Three Kings should abide by ASCII standards because they are a private business. And looking at our revenue recognition, revenue for long-term contracts should be measured by the percentage of completion method. Therefore, your 2021 revenues were overstated by $26,000. And in order to treat this, you will need to do a correction of error, which requires a retrospective adjustment. And we want to ensure that this doesn't happen again in the future. So we suggest that you create an unearned revenue account and record this account on your balance sheet as a liability. Next, we also have the opportunity to capitalize your fixed assets. And then so you'll be able to capitalize your lease improvements as well as your furniture and fixtures. And what this really allows you to do is to spread the cost of the asset over its useful life and avoid drastic impacts to the income statement, which is very crucial as a smaller business. Now, looking at our accounting treatment, you'll need to record your fixed assets as an asset on your balance sheet and amortize every year over its useful life, which will be the shorter of the lease term or the useful life of each of the assets. Now, looking at our ethical considerations, Jill's RFP with Bell Mobility is our first issue, and we suggest that you do not disclose information about Bell Mobility because sharing information would be a breach of fiduciary duty as you did work for them, and also would be a breach of trust in your relationship. And in order to help manage your relationship with Jill when you give her this news, we want you to find other ways to support her and also bring up any NDAs that you signed if needed to support your reasoning why you cannot share this information. Our next consideration is the CEWS grant, and we will suggest that you do not apply for this. And although you're eligible, you're not using CEWS for its intended purposes. Now into other considerations, we'll be looking at the Truth and Reconciliation Commission, and ideally, you would offer your service pro bono. However, future nonprofit clients may request free service, and you may not have the capacity to uphold all of this service. Therefore, we suggest that you charge a sustainable rate, and that sustainable rate could be your market price. And this will ensure that your services keep their value. However, this cuts into their budget and lessens their impact. Therefore, you should be able to offer up your 15% margin and offer to charge at cost. And in order to make up for the foregone margins, you can use intangible benefits such as your brand presence and community impact in DC. And this will fully allow you to sustainably support important causes. Now for implementation costs, we have our employee salaries, lease costs, utilities, tax, insurance, and maintenance, which come to a total cost of $237,000 for the year. And now looking at our risk and mitigations, we understand that even if you have a solid implementation plan, there are still risks involved. And the first one we identified is the heavy reliance on UCA. And in order to mitigate this, we want you to diversify your partnerships by working with more agencies and also continue to lead pitches independently for Three Kings. The second risk is that there might be low performance and weak company culture. And in order to mitigate this, you should increase your face-to-face meetings when possible, and also implement engagement surveys and collect feedback to set these new goals. And lastly, we have a risk of the lack of cash due to mistiming, and therefore we suggest that you apply for gap financing and also potential private equity issuance. Now, we know we covered a lot today in our presentation, so I do want to outline your next steps as a business owner when you wake up tomorrow. And the first would be to propose new UCA partnership terms. Second, finalize your lease agreements. And lastly, circulate those job postings to get the word out there. So, Ms. DuPont, we've walked you through our 3-step recommendation to grow, establish, and delegate in order to leverage your unique advantage. We believe that our recommendations today will help you take the right steps forward, and we're excited to see what the future holds for Three Kings Media. We're excited to also take any questions you may have at this point. Thank you so much.
All right, thank you for your presentation. Moving on to the Q&A period. Judges, please raise your virtual hand to ask your questions, and I'll call upon you to get this session started. We'll start off with Geeta.
Great, thank you for your presentation today. So a key pillar of your recommendations is to hire more staff. And so, you know, there is a war for talent going on right now in the pandemic. Some people in the media refer to it as the Great Resignation. How did you address this risk in your hiring strategy?
That's a great question. And so when considering the possibility of having our talent being scouted by other people, we do want to utilize your reputation and your connections, Ms. DuPont, because you have worked with many of these professionals in the past. Therefore, by knowing how strong of a leader you are, they will likely want to work with you again. And therefore, we want to use this as a key point and have you contact those colleagues that you've worked with in the past to really ask them to work for you again. And I'm pretty sure this will help really differentiate you when it comes to our hiring strategy.
Great, thank you.
All right, moving on to Nikki.
Hi, thanks for your presentation. My question is, you mentioned you wanted Shauna to increase the staff strength. When you do that, you're actually increasing the cost of the payroll cost. So did you factor in the CPP, EI, all those taxes to be paid by the company and some other costs to service the benefits? Because we actually, the company will want the employee to stay. And what did you factor into your calculation? And what is there any financial impact, assuming there's a problem with the cash flow? Thank you.
Yeah. So Kelly, if you go into the pro forma income statement, as you can see in our income statement, we actually factor into account all the benefits that we will be paying out to our employees. And we estimated that the hiring cost for 3 additional employees is around $130,000 to $140,000. However, we do mark up to a total of $150,000 just to capture those additional benefits that we will be paying out to our employees to make sure that they stay with the company.
All right, Geeta, did you have any further questions? No, okay. Any other further questions from the following judges? Going once, going twice. If there's no other further questions, we can stop the Q&A period. Thank you again for your presentation. Delegates, you are now free to go. Judges, hold on for one quick sec and then we'll see where we're headed next. Thank you, guys.
Thank you so much for all your questions and for helping us today.
Thank you.
Thank you.
Thank you.
Alrighty, so we have a quicker of a turnaround because of the delay due to technical difficulties. So AO7 room is ready to go. Everyone's on hold, so you're free to move on to the next room, and the next meeting's starting very soon. So